Yeah, morning, Trace. We've seen the debt ceiling agreement in principle playing through, and the market's not getting too excited about it. We're seeing S&P futures up about 30 basis points, but this was largely expected, and it passes through to Congress now to see if we can see any stumbling blocks there. But I think the three big discernible themes from a macro perspective this week are going to be AI, China data, and also the US exceptionalism story and how that feeds into the US dollar flows. On the AI front, Nvidia blew the lights out last week. What a company! $188 billion of additional market cap. Are we going to see that being $1 trillion at some stage soon? But clear pricing power, monopolistic qualities with gross margin guidance of 70%. The competition is that far away in certain parts of its business. But you're seeing that in Broadcom, AMD, Meta, Microsoft. There's a whole heap of companies that are working very, very well. Momentum is to the back. But is it too hot? Obviously, watching that NASDAQ very closely, the index is up 23% year to date. It's not really a developed market that looks anything like that at the moment. And we're only 5% away from the February-March 2022 double top. On the China side, we are seeing consistently their data coming in under expectations. The industrial profit numbers over the weekend were down 20.6%. We've got our eyes on this manufacturing numbers and also the service PMI through the week. If that comes in below expectations, again, that could perpetuate what we've been seeing. Big outflows through the northbound connect. A lot of that probably chasing money into US equities at the moment, but you're seeing those flows really manifest into a higher dollar CNH, and that's just causing the US dollar to strengthen across the board. But big breakdowns in Hang Seng and in the China H as well, and capital continues leaving there. But are we going to see a situation where the authorities there are going to organise people to start buying Chinese stocks going forward? On the US exceptionalism side, obviously watching payrolls this week, the market's looking for 190,000, but rate cuts have dramatically come out of the market. We've got 8 basis points of cuts coming this year. We've got a 50-50 chance of a June hike, and certainly when you see the rest of the world slowing down, the data missing and the US data improving or becoming in less bad, you are seeing that US dollar up now for 5-6 days in a row, and front-end yields really driving that as well. So something we are watching this week, whether that dollar flow continues in earnest.